All right, and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. So today's topic is, does E-Trade Solo 401k support Mega Backdoor Roth Solo 401k? So we're going to answer that question. The short answer is no, but there's a way to open up accounts at E-Trade that support the Mega Backdoor Roth Solo 401k, but it's not through E-Trade. It's through a company like us. But we'll get into it and break it all down, comparing the E-Trade Solo 401k versus ours and how you can have an account at E-Trade for your Mega Backdoor Roth Solo 401k. I see we've also got a good question here. So we'll get into it for a couple minutes and then we'll come to the question and then we'll finish up with the content. So as always, we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. It's always free to join. All are welcome. You can find us on our website. You can join it there. You can go to YouTube. So our website's mysolo401k.net. You can look for us on YouTube. If you subscribe on YouTube, you get the notifications of when we go live. You can come on and ask questions. You can see the history, etc. You can also find us on other channels like Twitter, like LinkedIn, for example, StreamYard. So there's a lot of great ways to connect. We also have our community. We have over 30,000 members. We have vibrant forums there. So a lot of people are coming on there asking questions, et cetera, et cetera. So it's a great way to learn, to share the knowledge. So let's start out with a question that's being presented because we love questions. So thank you so much for bringing the question. We appreciate the chance to discuss the topic. So this question was from the last session, probably earlier this morning. Thanks for joining. My taxes are already filed for the year, and my pre-tax Solo 401k contributions are already recorded on my personal tax return or my personal tax filing. However, I'm not sure with additional Roth or after-tax contributions how or even if I need to report contributions into the Roth account or the after-tax account. So that's a great question. So it depends on how the business is taxed. So, but if the business, say, is taxed as a sole proprietorship or a single member C LLC taxed as a sole proprietorship, Roth and after-tax contributions, there's no place to report those contributions on the personal tax return or the business tax return. Now, once the value of the plan exceeds $250,000, to your point, there's going to be a filing requirement for, and it's a partnership. Okay, well, likewise with a partnership, there's no place to report Roth or after-tax contributions. To your second part of your question, though, whether or not there is a filing requirement once the value of the plan exceeds a certain threshold, there is. Now, keep in mind, that applies across all the different accounts. So if there's two participants or if there's multiple sub-accounts like a pre-tax and a Roth, you have to add up all the total account values, including investments. And if the total exceeds $250,000, there is an informational filing requirement for the plan called a Form 5500EZ. We handle that as an optional free service for our customers. They just have to let us know once the value exceeds $250,000, and then we'll add them to the queue. We'll prepare the 5500EZ. Now, that's not reporting those contributions. That's really just an informational return for the whole plan. Now, you do have to report contributions on that 5500EZ, but it's really just all the contributions that were deposited during that year. It's due by the following July. Again, we help prepare it for customers via the electronic filing system. Now, specific to after-tax contributions, remember, the reason that folks make an after-tax contribution is because they want to make a Mega Backdoor Roth contribution. So making a Mega Backdoor Roth contribution is really a two-step process, because you first make an after-tax contribution, which again, that's not reportable on the personal or business tax return. But then the second step is those after-tax funds are either moved to a Roth Solo 401k or a Roth IRA. So that second step is reportable. It's reportable by the plan on a Form 1099-R. Now, we handle that Form 1099-R as an optional free service for our customers. They just have to let us know. They can use one of the online forms. You can find it at mysolo401k.net/forms. That's how we capture the information that's needed to prepare that 1099-R. but that would be issued for the year of the transfer. So many individuals, because the rules are different for self-employed individuals, are making contributions now in 2025 for 2024. So if they're making that after-tax contribution for 2024, but deposited in 2025, obviously the funds are not going to move out of the after-tax account to either the Roth Solo 401k or Roth IRA until 2025. So that 1099-R that has to be issued would be issued for 2025. It would be issued by the beginning of next year. Hopefully that makes sense. So please, again, chat over questions. Feel free to chat over topics. And if you're finding this to be helpful, please please subscribe. Liking helps us get the word out to other solopreneurs or self-employed individuals just like you, to help get this valuable information out to them. So back to the topic of, does E-Trade Solo 401k support Mega Backdoor Roth Solo 401k? And keep in mind, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. But keep in mind, for the answer to that question, does E-Trade's Solo 401k support Mega Backdoor Roth Solo 401k? The answer is no, because when you go to E-Trade, and I'm going to skip right ahead to our good chart we have comparing the differences. When you go to E-Trade to open up an account at E-Trade, you're using their plan documents. So their plan documents are going to be more restrictive. They're not going to allow for Mega Backdoor Roth Solo 401k contributions. But what individuals do is they go to a company like us that offers the Mega Backdoor Roth Solo 401k, then they use our documents to open up the accounts at E-Trade. And we're very hands-on in helping customers open up accounts. We're totally neutral as far as where the accounts are. We're not trying to hold our customers' funds or provide investment advice, etc. But we're very hands-on in helping customers open up the accounts, including preparing the paperwork that E-Trade would require to open up a brokerage account for a third-party plan. So even though E-Trade themselves, their plan documents don't allow for Mega Backdoor Roth contributions, they will still open up accounts for third-party plans that do allow for Mega Backdoor Roth contributions. And that's the way that a lot of these discount brokerages operate. In other words, Fidelity's plan doesn't allow for Mega Backdoor Roth, but Fidelity will open up accounts for a third-party plan that does. Same with Schwab. So when you compare the two, right, the individual E-Trade 401k versus our solo 401k plan, which is a fully featured self-directed plan, our plan allows for Mega Backdoor Roth solo 401k contributions. E-Trade's individual 401k plan does not. Our plan allows for employer Roth contributions. E-Trade's plan does not. Our plan allows for in-plan pre-tax to Roth rollovers, right? So that's where you have pre-tax money that's already in your plan and you want to move it over to a Roth status, right? Could be a cash transfer, could be an in-kind transfer, right? Let's say the stock market dips and the value of your assets inside that pre-tax account decreases. Now you want to do an in-plan conversion when the value is lower. So now you only pay taxes on the value at the time of the in-plan conversion from the pre-tax to the Roth. Then when the value of those stocks or other investments later increases, those subsequent gains will be inside the Roth account where you got that potential for tax-free growth. In other words, when you ultimately would liquidate those investments and withdraw the proceeds, as long as you do that after you've had the account for at least 5 years, and as long as you're at least 59 and a half years of age, all those subsequent gains will be totally tax-free. Now, E-Trade's plan does allow for loans. It's not clear. It doesn't appear that they do prepare the loan documents. Our plan, of course, does allow for loans also. We do prepare the loan documents as part of our service for no additional charge. So that means that you can withdraw money from your solo 401k. You can use the proceeds for any purpose whatsoever. Could be an emergency purpose, could be any purpose. It's not going to be subject to taxes or penalties as long as it's documented as a loan. And again, we handle the loan documentation requirements as an optional free service for our customers and pay back according to the terms. The terms would require that the loan is paid back in monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. And then in addition to that, other top reasons the customers would want to sign up with our plan, it allows for alternative investments like crypto, notes, precious metals. Of course, E-Trade's plan is limited to E-Trade investments. None of those are going to be allowed. We provide all the ongoing compliance support, right? The 5500 EZ, once the value of the plan exceeds $250,000, customers just let us know so we can add them to the queue to prepare the 5500 EZ. And we do it under the electronic filing system to make it easy for the customer. E-Trade does not do that for their customers. A 1099-R, right? When that's required, we handle that. Again, E-Trade doesn't, right? And all that's provided for no additional charge. Just to give a couple of top examples of the compliance support, $1,500 solo 401k tax credit. So setting up our plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. So that would more than cover our fees for the first 7 years, right? We charge $650 as the initial cost. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, right, this time next year, we would charge our $125 annual fee that covers the second year. So if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. And then, of course, as mentioned or alluded to before, right, you can definitely use our plan and have the accounts at E-Trade, but you also have the option to go to other brokerages, to go to banks, to go to cryptocurrency exchanges, etc. All right, so that gives us a good overview. Again, if there are questions or topics you want to discuss, we have time. Please feel free to chat over those questions or topics. Of course, we really appreciate the chance to discuss these topics. And again, if you're finding this to be helpful, please please subscribe. That helps us get the word out to other entrepreneurs just like you. So what we can do now is we can kind of talk about eligibility. So in order to be able to set up a mega backdoor Roth solo 401k, you need to first be eligible to set up a solo 401k, and then you have to find a provider like us that offers a plan that allows for mega backdoor Roth solo 401k contributions. So to be eligible, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees. So think like an independent contractor, a solo practicing professional, like attorney or realtor or CPA. You don't need to have a formal entity. We have many individuals who operate as a sole proprietor. Ultimately, what's important is that you report earned self-employment income on your taxes. So that's going to be on Schedule C, for example, in the case of a business that is taxed as a sole proprietorship. It could be an unincorporated business, could be a single member LLC that's a pass-through, disregarded, that's reports it on the 1040, right? You need the way for that type of person, the way that you report earned self-employment income is on Schedule C. Now, if your business is taxed as an S Corp, earned self-employment income would be W-2 wages from that S Corp. So you need to report earned self-employment income. There's no minimum amount that needs to be reported in order to be eligible. Your spouse or business partner can also participate in the plan as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2. You can have a solo 401k, even if you have a day job, even if you participate in your W-2 employer-sponsored plan, as long as you got that separate earned self-employment income. So that's what it takes, the first prong, right? Being self-employed. Now, the second prong is finding a provider that offers a plan. Like we talked about, E-Trade's plan doesn't, but our plan does. So you want to find a provider that offers a plan that allows for voluntary after-tax contributions and then in-service distributions. So that's what we were talking about before. Where making a mega backdoor Roth contribution is a two-step process, because you first make a voluntary after-tax contribution that needs to go into a separate voluntary after-tax account before the funds are moved over to either a Roth solo 401k or Roth IRA. So the voluntary after-tax contribution limits are much higher than the standard Roth solo 401k limits. For example, for 2025, you can contribute 100% of your self-employment compensation, dollar for dollar, up to $70,000 as a voluntary after-tax contribution. then move it over either to a Roth solo 401k or a Roth IRA, so you got that potential for tax-free growth. So you need to have a plan that allows for that. You want to work with a provider that will help with all the required steps, right? Because you do need to have separate accounts. So for example, we're very hands-on in helping customers open up accounts at the bank or brokerage of choice. E-Trade is definitely an option. And then finally, providing that ongoing compliance support. Because even though that first step, that after-tax contribution, that's not reportable on the personal or business tax return, that second step, when you move the money from the after-tax to the Roth, that is reportable on a Form 1099-R, which again, we handle that as an optional free service for our customers. Okay, great. So we've got a few more minutes. So let's go over a popular topic this time of year, which is the deadline. So when is the deadline to make contributions? Well, for those who signed up with us before the end of last year, or maybe you set up a basic plan somewhere else, like at E-Trade or at Fidelity or at Schwab before the end of last year, and then you upgrade to our plan here in 2025. Because the plan was established on or before the end of last year, you would have preserved the ability to make all types of contributions for 2024, employee, employer, and voluntary after tax, all types, all the way up until your business tax return deadline, including any timely filed extension. Now, for those who didn't set up a plan before the end of last year, either with us or somebody else, and now they're trying to set up a plan here in 2025 and still make 2024 contributions, it is possible, but your options are more limited. Your options will depend on how your business is taxed. So for your business, for those whose business is taxed as a sole proprietorship, could be an LLC taxed as a sole proprietorship. If a plan is set up in time to make the employee contributions by April 15th, in other words, the 1040 deadline, then you can still make those 2024 employee contributions as long as the plan is set up in time to do that by April 15th. Now, for those whose business is taxed as a sole proprietorship, who are setting up a new plan here in 2025, and you want to make employer or voluntary after-tax contributions, if you file a timely extension for your business tax return, in other words, if you file a timely extension for your 1040, you could still set up a plan and make either employer and or voluntary after-tax contributions for 2024 by October 15th, as long as you set up the plan in time to make those contributions by October 15th, and you file a timely extension for your 1040. Now, for all other business types, partnerships, S Corps, C Corps, if you didn't set up a plan, either with us or somebody else before the end of last year, then it's too late to make employee contributions for 2024, but there's still time, potentially, to make employer and or voluntary after-tax contributions. Let's say your business is taxed as an S Corp. If you filed a timely extension for your 1120S, then you would have preserved the ability to still set up a plan here in 2025 and make employer or voluntary after-tax contributions by September 15th. Because for all other business types, right, other than sole proprietorships or businesses taxed as sole proprietorships, you can still set up a plan here in 2025 as long as you do that in time to make those employer and or voluntary after-tax contributions by the business tax return deadline, including any timely filed extension. Okay, great. So we got another question here. Thank you for bringing it. So what you refer to as the mega backdoor Roth is moving, i.e. $8,000 voluntary after-tax from the solo 401k after-tax account into the Roth account. Yes, I mean, a mega backdoor Roth contribution is technically making a voluntary after-tax contribution and then moving the money over to a Roth solo 401k or Roth IRA. But keep in mind, the voluntary after-tax contribution limit is much higher than $8,000, right? The voluntary after-tax contribution limit is the overall limit, right? So you can contribute, for example, up to $70,000 for 2025, assuming that you have the self-employment compensation, right? You can contribute 100% of your self-employment compensation dollar for dollar up to the overall limit as a voluntary after-tax contribution, and then move it over to the Roth Solo 401k or Roth IRA. So that could be $70,000 in 2025. Yes, one's ability to contribute is a function of their self-employment income, right? The whole purpose of a 401k is for those who work to save for retirement. The purpose of a solo 401k is for self-employed individuals to save for retirement. So the foundation is having that earned income. So, for example, the Roth contribution limit is 100% of the earned income dollar for dollar up to $23,500 for 2025, and additional contributions if you're age 50 or older. The after-tax contribution limit is 100% of the self-employment compensation dollar for dollar up to $70,000. Of course, you got to consider the overall limit. So if you make a employee contribution, that'll reduce how much you can contribute as an after-tax because the sum cannot exceed the overall limit. But yes, you have that principle that you can't save more than you earn. Now, what your self-employment income is equal to will depend on how the business is taxed, right? If your business is taxed as an S corp, it's the W-2 wages from the S corp. If the business is taxed as a sole proprietorship, it's your self-employment compensation, where self-employment compensation is equal to your net income, i.e. the number reported on line 31 of Schedule C, less 1/2 of the self-employment tax. Great questions. Thanks for bringing it. So let's say you have enough income to contribute $70,000. Does that first go into the Roth account or the after-tax account? So it would first, let's take a look at these diagrams. So it would first go into the after-tax account before it gets moved to the Roth. So here's a picture where you got two participants, say husband and wife, both working in the same business, both participating in the solo 401k. They each might have 3 accounts: pre-tax, Roth, and after-tax. So those funds would first go into the after-tax before they move to the Roth. Or you can transfer those voluntary after-tax funds out of the plan to a Roth IRA. So here's a diagram that shows first going into the after-tax and then moving out of the plan to a Roth IRA. Well, great participation. Thank you so much. Again, if you're finding this to be helpful, please like. It helps us get the word out to other entrepreneurs like you. Please continue to engage. For example, tomorrow, we'll be back in the morning, 10 a.m. Pacific, 1 p.m. Eastern to discuss how to maximize pre-tax solo 401k contributions. And that'll be geared towards a business that's taxed as a sole proprietorship. Then in the afternoon session, we'll talk about the magic number, right? How much income one needs to be able to maximize solo 401k contributions. And that's, again, specifically geared towards businesses taxed as a sole proprietorship. So when you say $8,000, I'm understanding you're talking about an $8,000 voluntary after-tax contribution. It first goes into the after-tax. Step 1. Step 2, you move it to the Roth. And you have a choice. You can either go to a Roth solo 401k or to a Roth IRA. Good questions. All right, we'll give it another moment just to see if there's any more questions. No. The Roth contributions would go to the Roth account. So let's say that the person made $23,500 as a Roth contribution, and then they do the difference as an after-tax contribution up to $70,000. So they would first put the Roth contribution, the $23,500, into the Roth account. Then they would do the after-tax contribution to the after-tax account, then move the money over to the Roth account. So that at the end of the day, they got $70,000 in their Roth solo 401k. No. So the after-tax goes into the after-tax, and then the Roth goes into the Roth. So your ability to one's ability to qualify for the auto contribution tax credit is not a function of one's income. Now, you have to be eligible to set up a solo 401k. So you have to have a legitimately self-employed business with no full-time W-2 employees, then set up a plan like ours that includes the automatic contribution credit. Keep in mind that the employee, meaning the solo 401k participant, has the option to opt out of the default 3% contribution percentages that is set, but that doesn't mean that they lose the ability to claim the credit. So it's a general business credit, which would be used to reduce general tax liability. Now, if there's no tax liability, it can be carried forward. But again, there's no obligation to have a certain amount of income to be eligible to claim the credit. Just like there's no minimum amount of self-employment income that's needed to be eligible to set up a plan. You just need to be self-employed legitimately, right? Not just like a one-time event, right? Where you have a business where you're indefinitely pursuing self-employment activity with no full-time W-2 employees working for you. But it could be a micro business, right? It could be a side hustle, right? Person could have a W-2 job. Okay, well, wonderful. We appreciate all the great participation. Please continue to participate. Thank you so much, everybody.